Hello investors and welcome back to Just Randy Stocks. During this video I want to talk about another stock that I believe is getting into a buy range, and you need to add it to your watch list because this has long-term strong growth potential in the robotic process automation space. So this company is called UiPath, or ticker symbol PATH. And imagine that you're a manager or an individual working in a company and your boss asks you to come and write down every single one of your process steps and put a yes or no on whether or not those could be automated by a bot or a robot. And that's exactly what this company does. They offer a service to run on a desktop or in the background an automated process for any of those steps. The company's slogan is "We make software robots so people don't have to be robots." This is also part of Cathie Wood's ArcQ Holdings and is the 6th largest position. If this is your first time joining the channel, welcome, and feel free to subscribe if you like hearing about stocks when they're at that value point. I try and time my videos for when stocks are reaching the point of where you need to add them to your watch list, or you should consider starting a position or averaging down. And this is a growth stock that I have strong convictions toward. It was overvalued since it released in April of 2021. And now it's really getting interesting. So stay tuned. Let's go ahead and watch a video on Market Watch and hear what analysts have to say that have this as a price target of $80.
You called out Path, and this is one of our favorite names, and we're happy to discuss it. It's in a category, an emerging category called Robotic Process Automation, or RPA. And what RPA is, it's software robots that run on people's desktops or in the background, helps employees eliminate a lot of manual effort, a lot of data entry, a lot of filling out forms, a lot of logging into. And so it eliminates repetitive manual labor and helps automation and helps integrate systems.
So with a labor shortage and a number of job openings being available, businesses are looking to increase productivity, and one of the solutions is taking any process that can be automated and moving personnel around to accommodate labor shortage. So this is definitely something in the last 2 years that has really been picking up in businesses utilizing robotics. Let's listen to one more video. There's a small clip of Kramer talking to the CEO of the company.
Chipotle said that your automation software is cutting edge and does great things for them. But suggest I leave it to you to tell us what you do for Chipotle specifically.
Of course. Chipotle is really a great customer of us. They sign up directly to our cloud offering. They aim to be a cloud-first type of company, and they have great ambitions in becoming an intelligent restaurant type of company. So they work with us a lot in automating finance, back office tasks, and the key word was scalability. They were able to really scale with us.
Now, I know that you say, hello, you're UiPath, we make software robots so people don't have to be robots. Microsoft was on today. They are talking about doing the exact same thing as part of a Windows bundle, soft motive. What makes me think that I need UiPath if I can go to Microsoft and get it part of the bundle?
We have built this platform for emulating people. Microsoft built their platform for creating new type of application. It's a really different fundamental approach. Building emulation software is very difficult, Jim, as you can see in building self-driving cars. This is our bread and butter. And we are years ahead of any of our competitors in building reliable, sophisticated emulation software.
So let's take a look at the second quarter fiscal 2022 financial highlights so I can explain why I'm so bullish on this company and why the price has gotten so low since their earnings release, because this doesn't look that bad. So an ARR, or an annual reoccurring revenue, of $726.5 million as of July 31st, 2021 increased 60% year over year. New net ARR of $73.9 million increased 33% year over year. Revenue, $195.5 million increased 40%. These are not small numbers. And then you get down to the gross margins, and I like software companies because they can recognize gross margins in the 80 percentile range. And for a software company, this is one of the highest percentile ranges that there is. So there's two things that are causing downward pressure on the stock price, and then we'll take a look at the charts. So the first one is that they're just not profitable yet. So they're still in the process of growing, and that's the other piece. The second part of this is that they reissued guidance to account for growth. So on the 30-minute chart, you can see here on September 8th, this is the reaction to the guidance and the profitability being issued, and then it's trending down. There's a little bit of support. You can see it touches this line here at 53.52. So 53.52, and this is where we're at here. It went below that line, activated this RSI indicator. So you know it looks like it's going to trend back up. So I believe that this is a support line here. Hopefully we'll stay above this. But it looks like it's a good entry at this point. Now, this could go as low as $45, but the upside here is, in the $80 range. So if there's momentum that swings back towards this, now, of course, we got to get out of this month. So take that into consideration. Cost average down if you start a position here, but this is low. If you'd like to hear more about this stock, if you want me to take a deeper dive, be sure to hit that thumbs up button. That's going to let me know that you want to see more content on this. That's all I got, and I'll see you in the next video.